Fact or fiction? Today, we're going to be debunking 7 common investing myths that are possibly holding you back from building wealth. Investing can be a great way to build your wealth over time, but it can also be intimidating and confusing. Unfortunately, many people shy away from investing altogether because they're intimidated by certain myths that may or may not be true. Let's dive right in. Misconception number 1. I need a lot of money to start investing. Thinking you need a lot of money to start investing is like believing you need to wear a tuxedo to eat at a fancy restaurant. It's simply not true. In fact, you can start investing with as little as a few dollars. There are a ton of investment options out there, from stocks and bonds to mutual funds and ETFs, that allow you to invest small amounts of money. And if you're worried about not having enough cash to buy a full share of a company, don't worry. There are now a number of investing apps and platforms that allow you to buy fractional shares, which means you can start investing in a company with just a few dollars. So no matter how much money you have, you can start investing and building your wealth. It's like planting a seed. Even a tiny one can grow into a mighty oak tree with the right care and attention. Don't wait for the perfect time or the perfect amount of money to start investing. Just start with what you can, even if it's just a small amount. You can always increase your investments as you go along. And hey, if you still don't believe me, let me ask you this. Do you have enough money to buy a cup of coffee? You do? Great. Then you have enough money to start investing. Skip that fancy latte and put that money into an investment account instead. Trust me, your future self will thank you. Misconception number 2. Investing is only for the wealthy. Believe it or not, you don't need a yacht, a private jet, and $1 million mansion to start investing. Investing is for everyone. And with the way the economy and inflation is going, if you're not investing right now, you might be falling behind. Think about it this way. You don't need a Ferrari to drive to work, right? You can get there just fine on a regular car or even on a bicycle. Investing works the same way. You don't need a lot of money to get started. You can start small and build your portfolio over time. And let me tell you, the power of compounded growth is real. Even small investments can grow into significant wealth over time. So don't let the myth of investing being only for the rich hold you back. Start with what you have, even if it's just a small amount, and watch your wealth grow like a weed in a garden. Did you know that Warren Buffett, one of the richest people in the world, started investing with just a few dollars when he was 11 years old? That same investment is now worth billions. At the age of 22, Oprah Winfrey invested $1,000 into a local radio station. That investment paid off big time, and she went on to build a media empire worth billions. J.K. Rowling was a single struggling mother who used her welfare to invest in stocks. Those stocks became extremely valuable and helped her gain wealth over time. These are just a few examples of billionaires who started with a small amount of money and invested it to achieve incredible success. Their stories prove that you don't need to be born into wealth to become rich. With a little bit of knowledge, patience, and hard work, anyone can build wealth through smart investing. Misconception number 3. Investing is too complicated for me. For some people, investing can seem pretty intimidating, with all the fancy lingo, complicated charts, and confusing graphs. But don't let that scare you away. You don't have to be a rocket scientist to get started. Sure, there are some complex investing strategies out there that might make your head spin, but that doesn't mean you can't dip your toes into the water. Just like riding a bike, you'll need a little bit of practice, but you'll get the hang of it in no time. I know what you're thinking. There's already tons of overly complicated videos out there about investing. So that's where I come in. Hi, my name is Abdullah, by the way. In my videos, I break down investing concepts into bite-sized pieces and give you practical tips that anyone can understand. There are plenty of great content creators out there that I also highly recommend you check out, such as Meet Kevin, Graham Stephan, Andre Jick, and Ali Abdel. The truth is, investing doesn't have to be complicated. There are many simple and easy to understand investment options out there, such as index funds and exchange-traded funds, also known as ETFs. These investments allow you to own a diversified portfolio of stocks with low fees and minimal effort. Misconception number 4. I can get rich quick by investing. Investing is not a get-rich-quick scheme. Investing is a long-term game, and it takes time and patience to see results. Anyone who promises you a quick profit is likely trying to scam you. You'd have to be one of these 4 types of people if you want to get rich overnight. Number 1, you're Kylie Jenner with the billion-dollar makeup brand. Number 2, you just woke up with the winning lottery number. Number 3, Mr. Beast just handed you $100,000 in his YouTube video.
We are currently surrounded by countless sharks, and in this backpack it's 100 grams. And if you retrieve that $100,000 in cash, I'll give it to your number one fan.
Or there's a blue genie in your bedroom. Misconception number 5. Investing is only for the stock market. Investing is not just limited to the stock market. There are many other investment options available, such as real estate, cryptos, and even collectibles like vintage toy trains. Each investment has its own risks and rewards, and it's important to diversify your portfolio to reduce risk. Think of it this way. Investing is like grocery shopping during the pandemic. If you try to buy all the toilet paper, you'll leave no room in your cart for other important items. Putting all your money into one investment can leave you vulnerable to market volatility and potential losses. Misconception number 6. Investing is only for retirement. Investing is like a gym membership, but for your money. If you go to the gym to stay in shape and maintain your physical health, you should also invest to keep your finances healthy and in good shape. And just as you wouldn't wait until you're 65 to start exercising, you probably shouldn't wait until your retirement to start investing. Investing is not just for retirement. It's for any financial goal you have in mind, whether it's buying a house, starting a business, or taking that dream vacation. The earlier you start investing, the more time your money has to grow and work for you, so you can achieve your financial goals faster and with less stress. Think of it this way. If you invest regularly throughout your life, you'll have more money to spend on things that you love, and you won't have to pinch pennies in retirement. So don't be a financial couch potato. Get off your bottom and start investing today. Misconception number 7. Investing is risky. Do you know what's actually risky? Not investing at all. That's right. If you leave all your money under a mattress, you're actually taking a huge risk. Why? Because inflation is a sneaky little wallet breaker that can eat away at the value of your money over time. So by not investing, you're actually losing money without even realizing it. If you're still thinking that investing into the stock market is super risky, just know that it's actually a lot safer than you think. Well, it is true that there are some risky investments out there, like that startup that your long-lost cousin's brother's coworker is starting in his garage. But that doesn't mean all investing is risky. In fact, there are plenty of safe investment options out there, like index funds or real estate. And even if you do invest into the stock market, there are ways to minimize your risk. One way is to diversify your portfolio across different industries and asset classes. That way, if one company or sector takes a hit, you won't lose everything. Another way to minimize risk is to invest for the long term. Sure, the stock market might have its ups and downs in the short term, but historically it has tended to rise over the long run. By investing for the long term, you give your money time to ride out any bumps in the road and benefit from the overall growth of the market. And let's not forget about the risk of not investing in yourself. You're putting your entire life on the line. By not investing in your education, your skills, and your future, you're taking a huge risk that you're going to get left behind in a rapidly changing job market. So think of investing in yourself as a way to minimize your overall risk in life. So those were the 7 biggest misconceptions about investing. Remember, investing is not just for the wealthy. It doesn't have to be complicated, and you don't need a lot of money to get started. By investing regularly and consistently over time, you can build wealth and achieve your financial goals. If you found this video helpful, please hit the like button that allows YouTube to show this video to others. Comment down below with any comments that you might have. Hit the bell icon button so you don't miss any videos. Subscribe if you haven't already done so, and thank you, and I'll see you in the next one.